Did you know that employers are the largest purchaser of health insurance in the United States, providing benefits for just over 54% of the entire population? But in recent years, the cost for employers has grown out of control. Every year, employers are left with the difficult choice of absorbing the cost increase or sharing it with employees already struggling to afford health care. So what's driving this increase? Well, in most cases, it's the amount your insurer pays for claims. You see, healthcare is largely financed by traditional insurance companies hired to reimburse doctors and medical facilities for the care they deliver to your employees. But who decides how much these services should cost? Believe it or not, it's a top-down approach to pricing established by healthcare providers themselves. Healthcare providers mark up the true cost of their services based on what they want to be paid. Then your health insurance company negotiates a discount off of that inflated price, usually in the ballpark of 40%, called a PPO contract. The insurer then turns around and promotes that negotiated discount to you as the mechanism that's going to hold healthcare providers accountable and keep costs down for you and your employees. It's a racket. Just look at the average markup by inpatient and outpatient facilities across the country. 811% in Nevada, 578% in Arizona, 683% in Texas, 732% in Florida. So what does this mean for you as the employer? Well, let's look at an example. Let's say the true cost of a particular healthcare service is $1,000. In Arizona, that cost on average is marked up 578% to $5,780. Then an insurer comes in and negotiates 40% off of that price for a discount of $2,312, leaving you with a final claim cost of $3,468. That's the deal your PPO contract is getting you. In the meantime, you and your employees are paying that final bill in the way of deductibles, coinsurance, and increased premiums. Should employers just accept this as the cost of doing business with health insurers? The answer is no. It's time to take control. Employer Benefits and Advice has joined with like-minded, cost-conscious industry leaders to deliver a bottom-up pricing model called reference-based pricing, or RBP, that's quickly gaining momentum across the country. RBP starts with the real, true cost of a medical service or procedure, using what Medicare would pay as the starting point. Then our vendor negotiates a fair and reasonable reimbursement using a multiple of whatever Medicare would pay for that same service. The result? Considerably more money in your pocket, more money in your employees' pockets, and peace of mind knowing you're in control of costs that are now completely transparent. Let's look at the same example using reference-based pricing. In Arizona, a healthcare provider bills an insurance company $5,780 for a particular service. A reference-based pricing plan deems Medicare would pay $1,000 for that same service. The RBP plan agrees to pay the claim at 150% of what Medicare would pay for that same service, or $1,500. Final claim cost, $1,500 versus the $3,468 your PPO contract got you, more than twice the actual cost. Now imagine the savings on multiple claims. You see, at Employer Benefits and Advice, we know that in order to be valuable to you, we have to deliver value in all that we do. Reference-based pricing is just one example of how we're doing that, by bringing our clients next-generation solutions to better control costs, create transparency, and improve the health insurance experience for you and your employees. When it comes to cost control, it's time to start from a different starting point. Call us today and let us help you make the switch to RBP.